put out this report. It's really interesting.
Yeah. So it's just a kind of nice, concise review of the apartment market from Marcus Millichap, and it's got cap rates and capital markets outlined alongside rent growth and apartment fundamentals. And what I really appreciate about this report is its focus on increasing operating expenses, really pushing it to a headline issue for their quarterly report for the apartment market. Running an apartment building is getting more expensive, and it's worth repeating how. One of the expenses is insurance. I know it's utilities and even like labor costs. There are just a lot of different elements of expenses that, even though headline inflation is down, these expenses are being incurred this year because it's kind of a backward looking from the past and the way that the budgets are made and contracts are renegotiated. Their costs have gone up, and that kind of passes through, whether it's a landscaper or whatever. And so I think that's a lot of apartment.
The insurance. The insurance piece is the one thing that's really hitting folks, upside the head, in a way where it just, there's nothing really you can do about it.
Yeah.
But there's very little you can do about it.
Yeah. Yeah. And in that bar graph they have of expenses outpacing rent growth.
Yeah.
The average expenses in 2022, the average effective rent far outpaced expenses. But in 2023, the average effective rent growth was about half the average expense.
Yeah. I'm getting flashbacks.
Growth.
It's something we are still dealing with, but Matt, you'll remember, we basically in, early of this year in 23, and in the first quarter, first half of the first quarter, we had to completely relook at our entire budgets and realign them and bring them into reality. And that meant, changing the way that we operated in some ways to make things work. But it was very challenging, but we're in the Midwest, where they're calling out for Midwest and Sunbelt markets enjoy lower premiums specifically on insurance. But so here's what's, it's not always going to be like this, but for right now in the Midwest, and why our portfolio has been in a really good position, and why we're still really bullish on the Midwest, we're not seeing the increase. We're not seeing the relative increase in insurance premiums that other states are seeing. Has insurance gone up over the last couple of years? Oh yeah, for sure. Yeah, but it's not 10xing I'm seeing in some other states in the Sun Belt that you get hurricanes, some of these natural disasters. In Indiana, it's kind of boring. We have tornado drills every once in a while, but it's not that. It's a tornado is not. Every once in a while one happens. It's not that big of a deal.
But even though we're quote unquote spared from the high insurance premium, the fact that we're seeing a huge increase anyways is
still not easy. We're just not getting the extra hit. In Indiana, we're a property tax friendly state. We're not getting reassessed all across the board. We haven't had reassessments because we also do some strategies to making sure that the probability of getting assessed is as small as possible. So we actually don't get assessed, but especially when we're buying in Indiana. But also, expenses have gone up, and they're not as up as other markets. But also our rent growth is still positive. Yeah. Indianapolis is 1% according to the apartment list. But our portfolio, we're over 5% year-over-year rent growth. That's compared to most other markets that have seen negative rent growth and have been clobbered by higher expenses, insurance costs. Yeah. And Matt, they bought at lower cap rates. So their valuations, again, you've got the numerator, which is then net operating income. And then you've got your denominator, your cap rate. Both of those have gone in the opposite directions for a lot of the consensus investment markets that the folks, in New York City or LA or wherever are the Sun Belt sounds like a great place to invest. Yeah, of course it is. Doesn't mean you can just pay whatever price. Yeah. In the Midwest, we've been buying at reasonable prices, getting better growth, better NOI growth, and it's a reasonable place to do business as well.
Expenses there may not be as big of a surprise or for increased expenses as the year goes on and into 2024 because of lower inflation, but lower rent growth it's not going to leave a lot of hope for people that think that they can wait out the kind of whatever loan trouble they might be in.
And it's not like interest rates are higher.
Yeah.
They're not lower.
And this is going to be the real test. We're alluding to this loan maturity report that I'm working on and updating. But October, these maturities are coming on. October, November, December, they're going to be working it out and they're going to be waiting. One of the factors is, are we going to have rent growth that gets us out of this? Not in the near term.
You can't turn a whole rent roll.
Yeah.
It takes time.
Yeah.
You're not even going to be you're renewing half, new leases on the other half. Your renewals aren't as much as your new leases. You're struggling to get new leases. And then that's where you look at some of these models. People put a deal together, and it's like, do you not know that how the business works? They're so disconnected.
Yeah.
And again, it's like they read a book, they attended a course, they downloaded a model,
they sold it,
plugged in some numbers.
They were great salesmen to sell their numbers. People believe them. They saw the
real estate's exciting. That's what's frustrating, because it's like, it's such a good business. It's such a great asset class.
Mm-hmm.
I just wish that people didn't.
Doesn't have to be any better than it already is.
Yeah, exactly. Yeah. It's just it's good enough. We don't need to you don't need to sugarcoat it or make it and be real. Like, it's not always easy.
And we mentioned this. We're not going to name the specific names, but there wasn't an investor that was looking for the kind of diamond in the rough or super high expectations. And they talked to us. We were like, well, we can't hit that. That is completely unreasonable. You're looking for so much returns. And what happens is, if you're convinced that you're going to get so much out of
like a fly by night. Kind of
run into risk.
Exactly.
And this is what essentially what's happened is, people thought they'd get the huge returns. What they're really getting was huge risk, and now it's coming back.
Yeah.
And some of them did get those returns, but now comes the risk.
Yeah, risk equals return.
Yeah.
The reason why the GP in a deal makes a much higher rate of return is because they're taking on so it's a completely different type of risk.
And the number of I was thinking about this. Yes, the apartment market, it's not like 1 million apartments are traded every day, but there is enough that are traded. There's enough transactions that happened that there's going to be some risk. There's going to be some people that are going to be on the downside of these and aren't going to make it out.
There's always risk, and again, this comes back to, it's like, why it's a great asset class, and real estate can be in general, but especially residential and multifamily, large multifamily, is that if it all sort of looks the same in the beginning, but you can have a strategy and a set of tactics to go along with it that really quantifies and minimizes risk. It can cap your return in some cases, and the biggest way to do it is, you're going to buy right, clearly, but also you're going to hold it for long enough where you can work through any problems. You're going to use long-term debt, fixed rate financing, have a relative conservative assumptions, buy for less than you could build it for, and if you do those things, you can survive almost any market. And even if everything goes wrong, the chance of losing money is so small. Yeah. It's so small. And so it's an investment where it's like the downside, again, if you execute through the right strategy, and it's not something returns. Special that we have. Yeah. Like I'll be clear, I think I see people doing a lot of different things. We're not, we think we've got our different style, different, tack at it, but it's not right. We didn't invent the wheel. You can really prevent downside and still get awesome returns.
Yeah. I think that the people that had such high expectations, there's going to be, it's almost like the examples are coming of, this is what it means to have such high expectations, is that the risk percentage and when we'll see perfect examples of, you were expecting a whole lot. Well, this is why you were promised that. And there's the downside.
Yeah. You want to be careful when people either don't know what they do. In general, people who they think they know what they're doing, but they're just moving forward without any sense of direction and the risks. And sometimes that can work out, and you catch things at the right time, and you're moving forward, and you've got the momentum. But if you're just doing things blindly, whether it's false confidence, from, no success or just doing it, or you've had enough success where you're just continue doing away and when you've got blinders on, you build that machine, it's hard to turn off.
Yeah.
And so you need to be aware of, it's something that, we've been well aware of, is that, if you're an LP and looking at investing with a group, are they feeding a machine?
Mm-hmm.
Or are they looking at the deal the way, you would look at it as well?
Yeah.
Is just this another one to fill in a spot in their portfolio and is going to serve some ancillary purpose?
Mm-hmm.
And they just need the deal fees? Or is it a great investment because it's, they're truly excited about it?
Yeah.
There's obviously a lot of different shades in there, but there's definitely some of that, and some of that's going to be just kind of coming to light of like, these people had a strategy and they were just paying whatever because they didn't really care, because they didn't really have any skin in the game.
Yeah.
And they were going to get the fees and they were going to worry about it later. And like you talked about on the last episode, I think, Matt, is, and they personally believe probably like they can do it. They're confident.
Yeah.
They sound like they're confident that they can do it, and they'll figure it out. Maybe they will.
Yeah.
There's a lot of smart people out there that just took a lot of risk.
Yeah. There's enough things that happen where someone will certainly be in trouble.